Welcome back. I'm still Nick Houghton. This is still the Green Investment Summit. And I'm here now with Nicolas Mortensen, and we are Michaelsen. It's been a long day. Nicolas Michaelsen.
It started with an M.
It started with an M. We were close. And systemic change investments. We're talking about an awful lot of investment. We're talking about an awful lot of change. We're talking about an awful lot of impact. Cool. We had a quick chat before we came on stage. One of the things I'd like to dive right into is how to make projects big enough to attract capital. We had an earlier discussion with Mark from Better Energy, and one of the things he was talking about was that when he deals with institutional investors, they're looking for a place to park 50 million euro, which would challenge an awful lot of impact startups.
Yeah.
Boom. So how do you help the companies you work with make their projects big enough and attractive enough to attract capital?
Yeah. So the big sort of elephant in the room is that a lot of institutional investors still see impact as a separate asset class, right?
Gotcha.
So if you look at the financial sector, you have about $112 trillion worth of AUM. But if you look at where the
112 trillion with a T.
Trillion, yes, with
Cool.
a T.
And they have a problem. They got somewhere to park. They have to park that money somewhere.
Exactly. But if you look at how much there is in impact AUM, that's about 700 billion, right? 700 billion, 112 trillion, right? So it's simply not at scale.
So we're less than 1% of a percent.
It's very, very little. And the biggest problem is that it's still deemed to be a separate asset class, right? So people think you have public assets, you have credit, you have VC, you have private equity, et cetera. So they kind of lump it over there somewhere, right? The biggest thing that needs to happen is that we need to stop talking about impact. We need to just start talking about investments and better investments and factoring in non-financial KPIs. It's as simple as that.
Yeah.
Right? That is an issue, and this is coming back to the scale point.
Yeah.
The issue is that it's still stuck in silos, right? So it doesn't really matter how big you are. If you're BlackRock and you have $7 trillion under management, it's still not big enough, right? So collaboration, Søren said something very interesting about SDG 17, collaboration and partnerships, absolutely crucial. The other thing is that you need to structure it from the top down. So there's a lot of coordination that needs to happen, right? And you need to almost like reverse engineer. So if you're a pension fund, and you have a lot of constituents that want some change to happen, right? You can kind of start there and then reverse your way back into what should the structuring look like, right? It's not about, okay, what just happens to be the products or the funds that we have around. You almost need to start the other way around, right? So you start with the end, and then you structure that way down.
All right. Walk me through an example, because I'm following here.
Yeah.
Well, okay with this. Can you give me an example?
Yeah.
Like, how does this work? Because one of the other discussions we had also is what is impact?
Yes.
I mean, containerization, putting stuff into 40-foot boxes, 10 by 10 by 40 feet, that made transportation fabulously more efficient. So you could say that had a fabulous impact there. Per unit moved, it reduced the footprint.
Yep.
Also increased how much we move. There's always a balance, but walk us through an example of what you're talking about.
So let's take regenerative agriculture as an example.
All right. So let me regenerative agriculture. So planting something that regenerates the soil as opposed to sucking it clean.
Yes.
Gotcha?
Yes. Exactly.
So far.
So the big problem that a lot of the FMCG brands and a lot of the big corporates have today.
So like Nestle,
Danone.
Okay, gotcha.
Pick one, right?
They'd like to be green, but
they'd like to be green, but there's simply not enough supply in the world, right? And you can fund all of the material sciences innovations, which is really, really important. But if we're looking at what needs to happen in the next 5-10 years in order to get to something that's meaningful, it's actually more about how do you mobilize capital rather than looking at the individual little innovation.
It's like I remember talked to a Chinese merchant a year ago. He talked about the Chinese had just bought and built a factory in Denmark to make milk powder that would double Denmark's production of organic milk powder.
Yeah.
Because the Denmark wasn't producing enough of it themselves, so they came here. They're like, "You've got the milk. We'll make the factory that makes the milk powder."
Yeah.
So you're talking about. So this is sort of.
Yeah, it's kind of the same thing. I think it's more just about looking at everything has an impact, right? It doesn't matter. It's just whether you manage it or not, right?
Gotcha.
So reusing legacy infrastructure can be very impactful. Regenerative agriculture obviously is very impactful. Using new types of containers can be very impactful. But the thing that we tend to not look at is how do the impacts impact each other, right?
So yes, interconnectedness between.
Exactly.
Yeah.
Exactly. And there's a lot of risk or costs that sit at these like hidden impacts, right? So to give you another example, every time globally, every time we make $10 through the food system, we lose 12.
Okay.
Right? Net deficit, 2, right? We're actually losing money.
Yeah.
All over the place because of this, right? And I'll tell you why. The problem is we look at things in a food sector, right? But we don't look at the attributions that happen in health, environment, social, etc., right?
Gotcha.
So they all trickle back, and they're all systemic, hence the need for systemic investment.
So if we get into some specific examples, I know there's, for example, Maersk, the shipping company there, one of the things that they're looking at is the food waste. And you think, well, isn't their business about selling stuff from A to B? Yes. But what they say is between the port and the supermarket, almost nothing gets wasted because they can manage that. What they're looking at is from the field to the port, from the field to the container they can put on something. How do they reduce that waste? Because then there'll be more stuff to put on ships, and so they'll make more money.
Yeah.
So they're looking at the supply chain. What are some specific? Let's say we stick with food and food waste and the food supply chain. Specific points that you guys have identified and that you're investing in on that food chain, on that supply chain from my plate all the way back to somebody's field. Where are you guys? Investments going in there.
You know, nutrient density is a massive issue. Right?
Okay.
So if you look at 2 different products, one is organic, one is not. At the field, it looks the same, or they look very different, right? The nutrient density of the produce is night and day. If you look at them at the retail, it's the same.
Walk me through that.
So it loses nutrient density on the way from the field.
So the organic loses it faster than something that's been sprayed.
Yeah, but the point is that it loses the good stuff on the way from the field to the retail.
So you've got to reduce that.
Exactly, right? So and there are different ways of doing that. But again, like one of the biggest problems is that farmers can't refinance right now to do a regenerative transition. So a regenerative transition takes around 3 to 4 years, right? And there's a J curve, meaning there's a dip in the amount of money they can make. And they need somehow to finance that dip.
Mezzanine, whatever. Yeah.
Exactly. So one of the biggest problems is that literally no bank is doing this today, right? And it doesn't matter whether it's Triodos or some of the different impact banks that are out there. They're not geared to do it, right?
And they don't have the mass of the big banks.
Yeah. But it's more like I think the biggest thing to take away from all of this is that the biggest problem in all of this is that there's a bottleneck in our financial system. It's actually not about carbon capture technology. It's not about cultured meat. It is that, but it's more that we need to reconfigure how capital flows. That is the biggest inhibitor of actually turning things sustainable.
Excellent. So this is one of the common lines in our business is that the future is here. It's just unevenly distributed. Right. Yeah. And that, forever, another crazy example, I'm always thinking about it, we put a man on the moon before we put wheels on suitcases. So with this finance, some examples perhaps, give us an example of, let's say, how we're affecting this bottleneck.
Yeah.
Because some really, really small changes increase the flow enormously.
Blended finance.
So blended
finance where you blend different types of capital, right? So that could be everything from VC to leverage buyout, to public capital with philanthropic capital, right?
Gotcha.
Great way of having a risk reduction mechanism for large-scale institutional capital.
So who makes that type of thing happen? Because
there's not a lot. That's the whole issue. Think of it like this.
Well, what's the skill set we need for it? Is it
It's financial innovation.
So investment bankers that decide they'd like to do something for the planet as opposed to helping tobacco companies.
Yes,
restructure their debt.
For instance, right? But again, it comes back to the fact that a lot of financial institutions have a very hard time to do this because they're siloed, right?
Gotcha.
So the whole point is that you need to look at this as a horizontal and not a vertical exercise, right? So you need to stitch together what happens in VC, what happens in leveraged buyout, what happens in public markets. And that is, to answer your question,
Yeah.
it's a mix of different things. It's a mix of technology, right? There needs to be different types of technology that can help that understand interconnected risk.
Yep.
It's a sense of just like financial structuring. Like, why does a venture fund look like 10 years with 2-year extension, right? Why is it 2 and 20? And there are many ways where that is, there's a reason and it makes sense. But there are also many use cases where it doesn't make sense, right? So there's a need for more of looking at how we structure financial products and doing that in a way where we can say, if we're trying to achieve this, then let's reverse engineer that.
Excellent. So when I think of sort of clever financing, and you're welcome to read what you'd like to in my use of the word clever.
Yeah.
That when I look at real estate, there's a lot of imagination that goes into real estate investing. And oh my gosh, and all the crazy, lots of terms, but there's a lot of clever financing because are there lessons learned that we could map from that industry over to this industry?
I think infrastructure investors get this really well, right?
Yeah.
Because they're used to dealing with multi-stakeholders, different types of capital. There's public, there's private, there's regulation. There's all sorts of things that you need to manage at the same time, right?
So public-private partnerships, because I love when you say, because I'm thinking there's an awful lot of politics involved in infrastructure. The Americans can't build it because the politicians like this bridge will never be finished before I'm up for re-election.
Yeah.
No, okay, so let's say public-private partnerships would be a...
That's one of the ways that it
needs
to
agriculture
happen, right? Yeah, there could be agriculture, it could be packaging innovation, pick your poison. It's literally across the chain because it comes back to the same point that we're trying to isolate and separate the different things, and it makes sense why we've done it. The problem is that it's created a ton of problems for us.
Listen, any parent would say there's always a good reason why your kid did something crazy, but it still ended up being something crazy.
Yeah.
Well, so cool. So listen, so at Matera Capital, give us, what are you investing in? What's your ticket size? What are some of the things that you've invested in this space, and a little bit of reasoning why?
So we're not really a fund. So
all right.
No. So what we do is we work with large institutional capital like pension funds, sovereign wealth funds, large family offices, and we help structure and create and manage and report on financial products that can have the intended outcome that you're trying to drive.
All right. So and how do you structure these? How do you find what the money goes into? What are you looking for in terms?
So
of...
it all starts with what you're trying to achieve.
Right. So somebody comes and says, I've got 50 million I got 50 million euros.
Yeah.
Typical ticket size for your pension fund, conveniently enormous.
Yeah.
And I'm looking for somewhere between 8 and 10% return per year.
Yeah. I would, typically we kind of turn that around and say, yes, you want a return. What else do you want?
Okay.
Right? What outcome are you trying to drive?
And so what kind of outcomes are they?
So that could be a regenerative transition, right? That could be working with a corporate that is trying to transition their supply chain and creating a financial structure around that incentivizes the corporate, the investor, and the supplier, right? That's a very specific product that we're working on.
All right, and so what kind of industries, if you're working with corporates, what kind of industries are you working with there? We've got it's interesting to watch the oil industry, who nobody thought would ever change, and now there's a couple of us grumpy old men thinking, wow, all right, last people I'd have imagined was, Danish oil and natural gas. It was what it says on the box. Now they are one of the world's leading providers of regenerative, of let's say green energy, and they're called Ørsted. Or you've got Shell that's just being, British Petroleum. There's a whole bunch of these companies that are turning.
Yeah.
Who are you guys working with?
You just have to look at where does the liability sit, right? Corporates globally, again, we do a lot of international work, right? But have a liability that's somewhere between 400 to 800 billion. Right, globally, as a part of their emissions. That doesn't sit on any book anywhere. Okay. It's not right? Just look at who's the top, and then you can work your way down.
So
right?
they know that somebody sometime will eventually knock on their door and say,
yes, you saw what happened to Shell, right?
Gotcha.
It's about risk mitigation, and it's about transition, right? So, and that's the same thing we do. We look at where are the biggest risks, who have the most to lose, and then how can we structure products that help them avoid that. right?
All right.
We haven't worked with any fossil fuel companies, but there's, I think that
Plenty of
whole...
other sinners out there.
What's sorry?
There are plenty of other sinners out
Yeah,
there.
And but the whole point is I don't think it's about sinners
Let's
or
say
non-sinners.
companies with a liability that needs to be managed.
Exactly. We have
Yeah.
a path dependency, right?
Yeah,
The green revolution made tons of sense when we put that in place after the World War, right?
Spraying fields with pesticides and fertilizers to
Yeah.
increase the amount of food, absolutely.
Made ton
Big
of
plus.
sense. We fed the
Yeah.
world, right? Now it's just so happens to be that we've
Now we've gotten a little fat.
and we've depleted all the soils,
Certainly.
right? So it comes back to this. There's fossil. It's not like fossil fuel woke up one day and said, "I want to be a bad person," right? It happens, and it happened for a reason. So it's more looking at, okay, if that is the problem, then how do you structure your way out of it?
What do we do?
Yes.
Cool.
Exactly.
So your specialty is the deal in between somebody that needs to transition and needs help getting there. Who are you working with on the other side? So so how do you find the cases? How do you find the places to park the money and achieve the effect? Because if I'm thinking regenerative, I'm thinking, boy, that's an awful lot of farmers. That's an awful lot of fields. Mm-hmm. That's an awful lot of doorbells to ring. How about I get a hold of somebody that's got a network of what kind of networks are you working with?
So a lot of those networks already exist.
Yeah.
Right. So you have interest organizations. You have, every corporate has a supply chain. You can just start with the biggest supplier and then work your way down. Right. It's the point is that it's not about finding the diamond in the rough.
Yeah.
To a large extent, right? It's more about how do you structure the way where you have the intended outcome, right? It kind of flips the process on its head. Instead of starting with the supply, you start with the demand, and then you say, how do we feed that demand? And that could be a corporate that's trying to figure out their Scope 3 emissions, et cetera, et cetera, et cetera.
Yeah. All right. So, and so you get any examples of the partners that you work with at the other end? Because I'm thinking we've got an awful lot of partner organizations in an event like this, and so I was thinking how do they make themselves attractive to you?
It's not that they're making themselves very attractive.
How do they get a hold
sense.
of you? How do you sort of say, okay, Nicolas, who do they dial out? What kind of deals
we typically start with identifying a problem. Right? And then we look at who has the most to lose from that problem.
Can you without naming the big, without naming your customers, can you give us an example of a specific problem, whether it's, let's say, a packaging thing?
Yeah, regenerative agriculture is a very specific thing that we're working on.
All right, and so let's say getting it a step lower, so what is it? It's about getting people to reduce or eliminate what they spray the field with?
It's about transitioning the actual way you do agriculture.
Yeah.
Right. That's why the whole notion of systemic investing comes from the fact that it's we can invest in drone technology to map the fields, which we should.
Yeah,
right?
yeah.
But the big problem is that we have thousands and millions of farmers right now that can't transition.
Yeah.
Right. So even if we invested in all the cultured meat in the world, which I think is a great thing, right?
Yeah.
It's not going to solve the problem in fast enough time.
Then if I put my question in another way, one of the big leaps in agricultural production was in the late 1800s, a fellow called McCormick, right, who invented farm machinery. And there was lots of people that came up with, oh, wow, we can have all these big, nice machines. But the problem was farmers couldn't afford to buy the machines. McCormick came up with the idea. He said, I'll give you the machine, and you can pay me back over 3 years, and we'll secure this sale against your property. Because you can run away, but the farm isn't going anywhere.
It's stuck.
Right? Yeah, the farm is stuck, and so if you don't pay me, I own the farm.
Yeah.
And lo and behold, this caused this huge, it caused this huge leak in American agriculture and turned them into this, helped turn them into an even bigger agricultural exporter, and it was the business model. So lots of people were sitting around tinkering, inventing these machines. McCormick figured out the business model to put it in the hands of people and effected change. And I'm thinking, what kind of business, do you see similar things happening with, let's say, with the business model or with the, helping people get more money for their, or connecting with wholesalers?
The biggest problem, if you look at the root cause of everything, right? There are other nuances to it, right? But the one big thing that it comes down to is that externalities, meaning climate change, anything that's non-financial risk, is not priced in. That is the singular thing, right? So no one takes responsibility for it.
Yeah.
Right. So let's say you're a corporate. You do something that has an unintended consequence for pollution, et cetera. Right. Like that has not really been priced in until today. That's starting to happen now for carbon emissions, et cetera.
Okay.
Right. But it all boils down to that. Right. So it's more about like how are we clever around not using sticks, but actually using carrots, where you incentivize people all around, all through the supply chain.
Yeah, and so I mean, if you've got an example of anywhere, you know, sort of a carrot that's being used, let's say, of somebody reaching out and saying, you know, we've got, let's see, is it challenges? How are we getting the carrots? How are we applying the carrots?
Like the big project that we're working on at the moment is like sorry for keep coming back to it, but it's regenerative agriculture.
Yeah,
right?
and again, it's like regenerative agriculture and so on. So I'm with you. Like again, you know, so more specifically there. You know, I remember when they started planting rapeseed to put nitrogen back in it. So what kind of projects are you working with?
Yeah. So the problem is that you have had monoculture at industrial scale.
Yeah.
Right? So that's trying to just optimize for one thing, and that is crop yield.
Yeah.
Right? That creates all sorts of other problems down the chain because that's the only thing you're optimizing for, right? One of the things that happens is that the soil gets depleted. When it gets depleted, it can't sequester carbon, and the food that comes out is not as rich in nutrients as it was if it had not been done that way, right?
Cool.
So you need to do, if you have like the normal sort of like rows of produce, right? Then you need to create cover crops, rapeseeds, in between. You need to do a rotational way of switching between different crops.
Which history tells me, I remember they did back in the Middle Ages, they figured this one out. Yeah.
That's the whole point. We're spending a lot of time trying to figure out stuff that we've known for a long time.
Sure.
Right? So it's not hard.
Yeah, and so what's the key? Is it getting information out to the farmers? Is it transitioning the farm? Is it helping them finance it?
It's all of it. It's all of it. It is education. It is the access to technology so that they can do it. It is the access to better ways of managing their farms. Yeah. And it is the better financing.
Cool. And where are you doing this?
So it's European based right now.
Okay, so European based. And anywhere in particular in Europe, or is it?
We're looking at some stuff around Europe.
Around.
Sorry, I'm sorry, Kate, about it, but it's like we're working on some things that I can't talk
and
much about.
So it's especially places where you've had monocultures, and is it grains and vegetables, or is it also, we're big on pigs and cows here in Denmark. So is it also livestock production, or is it strictly?
Well, the point is that if you mix the two, then you actually end up with sometimes a better product.
Oh, you're back to those damn monks with them grazing, fields lying fallow, and you grazed it, and the animals did what they do, and lo and behold, I added fertilizer to the ground. All right, cool. Yeah. But it turns out there's money in this.
There's plenty of money, right? So like, just to give again another example.
Yeah.
A farm or a case study that we looked at a while ago. Over the course of this regeneration, and it takes like 3 to 4 years to go from the way that farming is being done today to the way that it should be.
So they've got a dip in income of, let's say, up to 50% that you've got to cover while they're doing this.
The thing is that over time, the inputs that you need go down. So your EBITDA margin actually goes up. Right.
You're making more money because it costs money to spray the fields. It costs money to buy the latest seed from March.
This is oversimplified because there will still be used for some input, and it's a transition, right?
Yeah.
But the point is, like, by and large, the fact is that it actually makes more financial sense, right? And that comes back to my point about it's looking for the carrots, not the sticks. You also need, sticks in terms of, carbon taxes and all that sort of stuff. I think that's like very, very important.
Yeah.
But it's more like, how can we create something that's better than today, right? I don't believe in we should do something that is worse than what we have today. And that's difficult, right? It's difficult to figure out how can we create better, credits programs. How can we create better ways of funding innovation, et cetera, because it's been specialized to the point where it is today for a reason, because it made sense and it worked.
Absolutely.
Right?
I mean, farmers aren't stupid. They are pretty focused on following the money wherever the money goes.
Completely.
Yeah, exactly. All right. Cool. And so do you, how do we make it go? Let's see. For example, the government role in this. Mm-hmm. How hard are they to dance with when it comes to?
Like carbon taxes, great example. Right? Something that is clearly needed, right? Because if you look at the flows of externalities, but let's call it just carbon gas emissions, right? You have an actor that emits something, and then you have typically a sovereign, a country that is faced to front the bill, right?
Yeah.
So how can we be more sort of fair on those costs? I think are going to be important. And again, coming back to this point that we see that there's a lot of these costs that are looming, which is why it's also now a game of fixing the price, right? Fixing the price of emissions.
Yeah.
So it's solving that long-term game while at the same time, short-term, making sure that it's a profitable way of doing it.
We talk about these companies, let's say the corporates that we're working with, about them changing their point of view on it, and it's interesting to hear them. These are super tankers, and they can be super hard to change, and yet it is interesting to hear how they change their perspective. I was wondering if you got a couple of examples. One of the ones we were talking about before was BMW, right, which is this German car manufacturer. And I met an angel investor at an event a couple of years back, and he was naming a couple of things he'd invested in. One of them was a rent my driveway concept, and this is when the Airbnb of everything was at its ultimate, And I said, and he saw me roll my eyes when he said, rent my driveway. And then he says, the interesting thing is BMW is my co-investor. And I thought, BMW, all right. What? And he goes, yeah, because he says they want to go from being a car manufacturer where they sell you one car and then they got to wait 5 years for you to come and buy another one, to go from that to being a mobility provider. And so the cars would just be one piece. And so I'm thinking, what have you seen through some? So that's a major change from manufacturing artifacts for single sale to being a service provider.
Yeah.
Total different set of skills. What skills do you see that the corporates need to learn to be able to embrace this? Because this is a very different way of thinking. When they look at their supply chains, they're looking at supply chain optimization. And can we make this for 1 cent less per 100 million pieces? Total up to thinking differently. What in their mindset needs to change for them to be able to embrace this? Is something other than greenwashing?
Yeah. I think one of the most important things is probably to not just look at risk, but also at value creation, right? Because it becomes a lot about risk mitigation, which is important, and you need to focus on that, obviously. But in the sole focus on risk mitigation, there's a high chance that we're going to lose the point about value creation.
Yeah. If you never take risks, because risk mitigation. Let's say in risk, you can reduce a risk, you can accept a risk, or you can mitigate. You can reduce the effect of it if it happens.
Yeah.
But most people, when they think of risk reduction, they think, oh well, let's just not do anything.
Yeah. And they're people are working on great things all throughout different types of products and supply chains and stuff like that, right? But it's it keeps the sole focus keeps hovering around risk mitigation, right?
Cool.
So it's instead of thinking about who are my competitors, then also think about I don't have enough money. My 5 competitors don't have enough money to solve this. Maybe there is a reason to, or there's a rationale to do this together that kind of helps us all out.
Telecom providers working together to create a standard like 5G so that they can all make more money.
Exactly.
Cool. American teleoperators, are you listening? They've all got their own networks. None of them work together. Oh my God, and they're always behind, and they're dropping calls. And you're like, this is a thing? All right, cool. And so I was thinking of, with these corporates, what do you see in the way, let's say, examples of how they change their thinking about things, from going, let's say, from being, I am a manufacturer to I am a provider of this service. What do you see, let's say, with your agricultural focus, with this, regenerative, is it them taking responsibility for more of the supply chain as opposed to, we think of, let's say, FMCGs, I make yogurt. Well, actually, I'm also responsible for the effect the yogurt has all the way through. Is that a change you're seeing them?
Bingo, yes,
right.
Yes. And that is probably the biggest thing that needs to happen. It is knowing that, the purchasing power is so strong with these corporates, right? That can actually be turned into a force for good. And it's not just about sitting around the bonfire and singing Kumbaya. It's just better business.
It's just about, definitely at the end, they're measured on how they make it.
Of course.
I've seen there's a major, it was over in Sweden, saw a big meat provider, so a company that runs slaughterhouse. I don't think they call them slaughterhouse, meat processing plants, I think they're called nowadays. But in any case, what they were doing, internally in their company, they were being out-competed by meat that was being produced by their subsidiaries in Poland and Germany, where they had lower labor prices. And so they saw, okay, we need to go for sustainably sourced local meat that's organic, et cetera, and completely traceable, because we need a higher value product that we are producing here in Sweden that we can then make money. Otherwise, we're going to just end up being a little sales office for the rest of the organization elsewhere. Do you see that internally in companies? You ever see that? Or is it strictly from the head office that you see? Or?
So that's actually one of the big problems, right? Because a lot of these big corporations and conglomerates, right, they look like one thing, but they're actually pretty decentralized, right?
Oh,
it's
yeah.
a lot of little, independent
like
units.
Microsoft Denmark is not Microsoft Denmark or
exactly,
IBM Denmark.
Exactly.
Yeah.
So while I, on one hand, advocate for the fact to do like top down, you also need to have something that works bottom up, right? You need to kind of like make those two come together.
So a lot of these companies actually have a product that could be interesting for the local affiliate of a very, very major corporation.
Completely.
You don't have to go to Seattle to get a decision out of Microsoft just to name them. But all right.
So it's understanding the flow of capital, and then understanding how you sort of like rejig that in a way where it works all throughout that circle of trust.
Understanding the flow of capital. I mean, we do definitely tend to look at, let's say, if we're soil regeneration, we're thinking Farmer Brown and his little red tractor. But what we're not thinking is the company that makes the seeds that go in, or understanding the entire industry from top to bottom.
Exactly, and that's we've specialized so much that we've lost the big picture, right? And that's why, but you can also not lose the detail in just looking at the big picture. So coming back to, there are a couple of things that are key issues we need to deal with. One, it is how do we price in externalities, right? And that's happening whether it's a social license to operate, whether that's carbon taxes, et cetera, right? But it's also about like how do we make sure that this is actually implementable?
So exactly. Also, what I'm hearing actually is that part of what you're advocating is for the people out here that are making point solutions, is they need to understand the full context.
Yes.
So understanding the finance function is a great one if you're raising money.
Yeah.
Right. Got that. And I was thinking exactly this. There's also a bit of UX involved in it.
Yes.
So if you think UX for the rest of the organization, I'm thinking people making ag tech. I remember one of the key lessons was, don't make me get off the tractor.
Yeah.
It was there's a load of interesting technology, but if you make it, I need to keep driving because I've got 75 hectares to plow today, and anything that makes me stop the tractor is bad. And so with this is understanding, okay, how does the money flow in the industry?
Let me give you a good analogy, because that's kind of like how I tend to look at it. So in colonial India, back in the day.
Which wasn't that long. 1947.
No.
Cool.
There was a big problem with cobras. So this is called the cobra effect, right? And we keep doing it all over, right? So there was a big problem with cobras. So the
snake.
Exactly. So the government put a bounty for each cobra that was handed in, right? Worked wonders. More cobras handed in, it was great. The problem was they saw that the problems of people being bit by cobras did not go down. So then they started looking into it, and they saw, of course, people started cobra farms, right? Gaming the system.
So if you count something, you get more of it. Oh my God, this happens everywhere. I work in legal tech, lawyers, billable hours. If we're measuring lo and behold, lawyers never leave the office because they're forever billing hours. Cool. So if you count something, you get more of it. What do we need to be counting to get more regenerated fields? What are some of the carbon footprint? How many tons of CO2? Good, we got tons of CO2. Bad. What else would be a good thing to count so we can achieve more effect?
Nutrient density.
Rock on. Okay, if you can help me out here. We're talking like calories per, because like nutrient density, I get it, but I don't
minerals, all the good stuff in the produce. The good stuff.
All right, so like grams of X in hundreds, so milligrams of this. So like when it says on the side of anything in America, it's like 700 things listed.
Exactly.
Voila. All right. So like
it could be carbon sequestered. It could
Carbon
be
sequester, all right.
farmer livelihoods. It could and the point is you kind of need to measure all of those KPIs because each of them that you don't look at
When you say all
is a
of them,
risk.
brother, I go, oh man, can we start with just like 2? If you had to pick 2 or 3, what would you measure? That grams of carbon sequestered. That sounds
Nutrient
kinda
density
good.
is a really, really good
Right,
key.
nutrient density.
KPI.
Of course, like
Yeah.
of all the nutrients, because there's a lot of them.
Yeah.
You know, a couple of things. Like are you measuring calories per 100 grams? Or are we measuring?
Like literally minerals in, if it's grain, like minerals in the grain, it could be whatever you're producing, right? There's a really interesting study now being done that is trying to ascertain the correlation between lack of nutrient density and COVID cases.
Ooh, nice.
And or severity of COVID cases.
Yeah.
It's non-conclusive yet, but it just comes to show that something that sits within a food dimension has massive implications in health, et cetera, et cetera, et cetera.
Nice, you tied in COVID. Did you catch that? That was like, oh yeah, that was a good one. Tie in current affairs into what you're saying on stage. Good, I love it. I'm getting the high sign over here where it says stop talking. So we're going to stop talking. I'm going to say thank you very much, Nicolas.
Thank you.
Nicolas, great name.
Thanks.
Cool.